Are there any buyers left out there? The stock market has lost hundreds of billions of dollars since the Fed announced they're hiking interest rates, and it's just the beginning. 401ks, mutual funds, bonds, stocks, nothing is safe, and fear is front and center on Wall Street. So what's an investor to do? Hi, everyone, and welcome to Buy, Hold, Sell. I'm your host, Veronica Dudo, and I'm joined by the traders, Tobin Smith, Todd Schoenberger, and editor-in-chief of the Stock Traders Almanac, Jeffrey Hirsch. All right, Toby, you've turned to the dark side over the past few weeks and seem to be completely bearish. Has anything changed for you after this week?
Energy really since the crash and majority along all the energy complex. So no,
Toby, I think the question's for you. All right, I'll speak for him. I got to tell you, I know Toby. Toby was pessimistic, but he's really big on oil right now. He's really big on the energy sector, and that was his big thing. Toby, you start speaking. Well, take your count.
I'm sorry. I'm sorry. I did not hear an intro nor myself. Our crack tech crew is at work, I guess. Look, I from the essentially from December have been short the tech wreck because because Jay Powell told us that we had to go into a fast rising interest rate environment because, guess what? Inflation's out of control. And then that was before, obviously, the invasion. So you're going to have days like Friday. You're going to have the rip your face off days. But that's what a bear market does, is everybody's so short, as I was showing you. Look at this. This is a Wall Street Journal. These are all the 52-week lows yesterday. I've never seen a full page on the Wall Street Journal. So what happens is, everybody who needed to sell got forced to sell, got margined out. When we came into Friday, there was nobody left to sell. So guess what? You cover your shorts in other words, you're betting against stocks, and there's a relief rally, and it's a rip your face off relief rally. But it has nothing to do with the overall trend, Todd. The overall trend is this. Because of interest rates are doing this. You get my
I get your drift, and I got to tell you, though, I call this a sucker's rally right now. I mean, you have so many people that are going to end up buying into this market. We've had, 6-7 straight weeks of stocks going lower, and we haven't seen that for over a decade right now. So realistically, going forward, I have to start thinking you're going to have so many people from Main Street that are going to buy in today and think they got in at the bottom, and guess what? It's going to give out. Jeff, what do you think about all this? Because you're the man with all the metrics right now and all the data points. But
let's not forget, we just entered the worst 6 months of the year, the weak spot of the 4-year cycle, the trends that I'm looking at, the comparisons to 74, 1970, 1962 are all telling me let's all just stick to the system and be patient, because this is a period of time for the market, for the year, for the 4-year cycle where stocks are prone to go down. We've got a lot of headwinds, inflation, the war, China lockdowns. There's a lot of things going on out there that are conspiring together with the seasonals, with the cycles. So, relief rally, whatever. We haven't seen bottom. Everyone's still looking for bottom. When people start saying, should I sell? Should I sell? Then we get the bottom. When we have somebody blow up, somebody big, go bankrupt like a Lehman or long-term capital, then we're there. But, it's like a basketball going down a mountain in a relief rally. It bounces up and down and all around, and then it goes down through the bear market. So
I saw a line that's circulating on social media.
I'm with you. I would also say that remember that the bond market, stock investors, particularly new investors, really don't have any idea that the risk on or the risk off in stocks is based on bond prices. Guess what? Because if you're getting negative return, which you got on bonds for basically 8 years, you lost money, then, TINA, there is no alternative, was what got our stocks going. But when that reverses, all of a sudden, I can buy a 3% bond. Remember, we used to have $16 trillion of negative return bonds in the world where you were guaranteed to lose money. Well, today we have $1 trillion. It's gone completely reverse. And now on a risk-reward basis, I can see, and we in our managed portfolios, we're starting to buy U.S. bonds, 5-year bonds at 3% return. there are alternatives to risky stocks. And this is the natural process of the bond market basically beating the crap out of its little brother. Because the bond market, is about $55 trillion. The global market's about $25 trillion in stocks. So bonds are in charge.
I saw a joke
online. I'm sorry, go ahead.
I saw a joke online in which it said, "Where's the Wall Street Park Ranger?" because the Bears are coming out for a picnic. So not really so much of a joke, but curious, are we in stagflation? Jeff, you want to take that?
That's a good question.
I don't feel like we're in stagflation. It's a little too early to tell. I mean, we've got inflation for sure. We've got some slowing growth one quarter. But that can get alleviated. Stagflation is something that's hard to find, hard to create. It took a whole long energy crisis in the 70s to do that. Inflation, yes. Slowdown of growth, yes. Probably a full-fledged bear market, midterm year bottom, yes. But stagflation, I don't see it just yet.
So, Toby, where do we go from here?
Well, quickly, our data says that we are going to be in stagflation next year. And the reason is because all of the inflation issues that we get, everything part of the CPI, the big parts, housing, 33%, that's not going down. Energy, not going down. Food prices, because of energy, not going down. And you take the sticky parts. And then the other big issue is when those fixed inflation gets put into the marketplace, then wages go up. So wages are not coming down either. So if you have the four horsemen of embedded inflation and you have global demand slowing because of Europe slowing, because of China, because of the United States. Remember, 66% of Americans live in households that, live paycheck to paycheck and have $400 in the bank. We saw $55 billion of gasoline and food and everything else put on credit cards in April. That is not good. So our definition is if the GDP is growing less than the inflation rate, that's stagflation. And we see that really starting in the second quarter of 2023.
Todd, give us your final thoughts to close out.
Yeah, I have to agree with that, but I have to say there's so many headwinds. Jeff talked about them, and Toby also added a few other clues there. I have to wonder going forward, though, I don't see anything optimistic right now in the stock market. And this is an election year, by the way. You would think that we would be up higher. I'm sure Jeff has some good stats with that one. Yeah, midterm election year, exactly. And now going forward, I just don't see it. I think if you're an investor, if you wanted to, you could probably sell into the strength today. You should have gotten out while you can, because this thing's going south in a hurry. We're going to see it next week. Retail sales number out on Tuesday. I think that's going to move the needle lower. I'd stay away from the markets right now.
All right.
Cash is king.
That's right. Thank you so much. Oil was in the news this week, but for all the wrong reasons. Coming up next, the traders will be joined by Bloomberg senior oil and gas analyst Fernando Valle to discuss soaring crude prices. Stay tuned.
Hey friends, investor friends, this is Tobin Smith. I just show this if you may remember me from my 25 years on business TV, but it's not about me, brothers and sisters. It is about this. We are about 5 times the average, stock average, over the last 2 years. But more importantly, this year, we're up about 67% in our portfolios, while the S&P is down, 12% and going deeper. And the Nasdaq's down 25% and going deeper. Let me ask you this. Are you tired of losing money? Because right now, we forecast not only a big recession in 2023, but we think we can do this again. We think it could be up again another 50 to 60% by being in the right place, the right stocks, and at the right time. That's what we're doing right now. So join us, transformativeresearch.com. Get on our free newsletter, transformativeresearch.com. Join us for free and stop losing money.
Hi, everyone. I'm Veronica Dudo, and welcome to Buy,
Hold, Sell. If you have the Russians that are going into Ukraine, the Americans and the Germans and everyone else in Europe is going to say, hell no.
Russia doing things, logically was their MO, I'd agree with you. Yeah, Todd, why don't you get him on a phone call right now? Hello, you.
Welcome back. The national average for regular gasoline climbed another 17 cents over the past week, setting a record high price for gas at $4.37. To help us break down why this is happening, we are joined by Bloomberg's senior oil and gas analyst, Fernando Valle. Welcome to Buy, Hold, Sell, Fernando. Okay, so prices are popping for oil, and it's causing prices at the pump to hit higher highs. Is there any relief in sight?
Hi, Veronica. Great to be here. Not really, not in the short term, unless we see a really massive breakdown in demand that's triggered by either a black swan event or the Fed massively raising rates, which is still a few weeks away. When you look at the inventory levels for both crude oil and the refined products, in particular diesel, they're multi-decade lows. And it seems like we closed a little bit too much refining capacity during the pandemic, especially in North America. And we really just can't ramp any faster than we are. So at first, the concern is we're not producing enough oil to offset the Russian loss of production. And now we're getting to the next bottleneck, which is refining. We don't have enough refining capacity. And if you thought it was hard to add oil production, you'll find that it's a lot harder to add refining capacity in a hurry.
Now, we also saw this week that the Biden administration stopped the leases in Alaska and also the Gulf. Can you explain a little bit about how that plays into everything?
Yeah, in the short term, it has very little impact because those leases are being sold for exploration. So the companies tend to acquire those so they can go look for new resources and new reserves. So it doesn't impact production immediately. The issue is, and you've seen this in countries that have stopped lease sales before, after a couple of years, you start to see a major decline in your productivity. And we're not in a place where we can move away from oil within the next 10 years. And just the contrary, we're trying to grow our energy independence so we don't rely on bad actors internationally, Russia being the prime example. So the Gulf still has a lot of potential. Alaska has made some significant discoveries in recent years. And it would be one way of diversifying our sources of oil, especially because they both bring very interesting crudes that are different than U.S. shale.
Now, you also talk a lot about price controls, and also you look at Latin America as an example. What are your thoughts about some talk that could potentially be in the cards moving forward?
Well, Jeff mentioned the 1970s, and that's something we did in the 1970s as well, and it didn't work out too well. If you look in Latin America, I'm Brazilian by birth and raised, and when you put a price cap, it's supposed to allow for it to be affordable, but really it incents more consumption, especially for wealthier folks that would have been able to curb their demand otherwise. It's never ideal, but it's better to give subsidies to lower income so that they continue to afford their commutes and their daily lives than to necessarily price cap, because ultimately that leads to shortages. It promotes more consumption as opposed to avoiding what is a natural process of demand destruction when prices are too elevated.
Now, of course, as we know, what happens in the oil markets never stay in the oil markets. Can you talk a little bit about how the price of oil expands and it affects the prices of other goods and services?
Absolutely. Yeah. Diesel is the most pervasive of them all. And today, a barrel of diesel is almost at $200 a barrel in parts of the U.S. and even higher once it gets to emerging markets. Diesel, it's our heavy transportation. So all the trucks that deliver our Amazon packages rely on diesel pretty much. All of our agriculture. Jet fuel is very similar to diesel. It's a slightly different product, but very similar. So all of our transportation. And since 2020, when the International Maritime Organization put in a new mandate, a lot of ships also use diesel to bring all our freight across the world. And lastly, I'd say that heating it's a part that's really underestimated, but all New England uses diesel for heat since 2018.
Toby, that's a big point for you. You want to jump in on the conversation?
Well, Fernando's right on every point, but the other way to describe what's going on is that there are 150, 200 big players in the United States. We are the exporter of the world. If all those 200 players said, all right, we're going to drill, baby, drill, it would take a year to a year and a half before you'd get any natural gas or any oil out of the ground. And one of the reasons simply is because because of ESG, because of environmental issues, et cetera, et cetera, et cetera, also losing about $6 trillion chasing after oil prices. We're not investing anymore like we used to. Number two, we don't have the people. If you're going to work, I was kidding with Todd, if you're an oil deck worker, and you're in 110 degree in Texas with 40% humidity, and you're making $18 an hour, or you could go to Amazon and work in the warehouse for $22 an hour, have all sort of benefits, and have a lunch break for a half hour. They've lost 40% of the labor in the oil patch. So you add it all together is we are higher prices for longer with structural reasons. And that's even before you talk about de-Russifying the Western world. And we're coming into summer. In theory, to Fernando's point, in the old days, when interest rates went up and demand went down, we had demand destruction. But now we're having demand destruction, but at the same time as we're having supply destruction. We never had that before. Go ahead. I'm sorry.
I don't see any demand destruction at all. I mean, maybe it's because I'm, in the New York area, but there's cars, lining up the highways. There's people, using energy. I don't see any demand destruction. Just people spending more money. So I'm not sure when the price of oil actually impacts the demand, that there's a reduction of demand. Can somebody tell me that? I don't.
I'll jump in on that one. The first place where you're going to see is actually emerging markets, and it is important because it's a fungible market, global market for oil and gas, and we're seeing it throughout Latin America as a prime example. And we export over 1.1 million barrels a day of diesel to Latin America, so that's a very significant part of our production. They're already hurting, and guess what? A strong dollar, as we have the sell-off, and then higher interest rates, that all compounds. They have a massive debt load. They're at maximum U.S. dollar-denominated debt, and then the dollar strengthens. So it's a very vicious cycle, which we're seeing in EM. Just look at Sri Lanka, for example, and they are starting to have riots. Right. So that's something that is very, very poignant, and it will impact our demand. And then in the U.S., you have seen the weekly average of the domestic demand fall over the past 5 to 6 weeks for both gasoline and diesel. We've kind of been bailed out because we've been exporting more, but those are more than likely timing effects because people are building inventories, especially because of the fear that there would be shortages.
Todd, what's your take?
I have a question though. With the lockdowns in China right now, say there weren't any lockdowns, what kind of prices would we be looking at for crude? I mean, right now it's at 110. I'd imagine that it's actually at a discount because of the slowdowns that are taking place over there.
Absolutely. I mean, it's anybody's guess where it would be. Certainly higher, because this will also have repercussions on the supply chain. And if we thought the world is unaffordable now, just imagine after we get all the pass through from Shenzhen and Guangzhou and Beijing being locked down for as long as they have been. I mean, we're yet to see all the ramifications of it. And I'm reminded that some folks are saying that because of the initial supply chain issues on our lockdowns, the Western lockdowns, a lot of the retailers built up a lot of inventory. So that's why we saw, for example, lumber crashing and other of those goods coming down. Everything that peaked got an inventory buildup. As we work through that in China and the supply side being locked down, we might see another leg of inflation coming up in the second half of the year. And so I'm with Tobin that I think it could look much uglier in 2023.
Oh,
right.
Fernando, thank you so much for joining us. We hope to talk to you again soon. Coming up next, if you thought investing in the stock market these days was miserable, wait until you hear how the worst performing investment this century is treating investors. What is it? Tune in after the break. Buy, Hold, Sell Live, brought to you by Transformity Research.
Hey friends, investor friends, this is Tobin Smith. I just show this if you may remember me from my 25 years on business TV, but it's not about me, brothers and sisters. It is about this. We are about 5 times the average, stock average, over the last 2 years, but more importantly, this year, we're up about 67% in our portfolios, while the S&P is down, 12% and going deeper. And the NASDAQ's down 25% and going deeper. Let me ask you this, are you tired of losing money? Because right now, we forecast not only a big recession in 2023, but we think we can do this again. We think it could be up again another 50 to 60% by being in the right place, the right stocks, and at the right time. That's what we're doing right now. So join us, transformativeresearch.com. Get on our free newsletter, transformativeresearch.com. Join us for free and stop losing money.
If you like Buy, Hold, Sell Live, be sure to smash the like button.
Lights, cameras, connectivity to every kind of screen, with 6 broadcast studios and experts ready to help plan the event. Big Wig Media's broadcast center at the Willard is the ideal headquarters to host your virtual meetings and video conferences. Let's get started.
Welcome back. If you invested in any cryptocurrency in the past year and you're still holding on to it, some of our traders think you might want to get your head examined. The entire cryptocurrency market now has a market cap of $1.2 trillion, less than half of the $2.9 trillion it was worth in November. Todd, you say the bleeding isn't going to stop anytime soon. Explain.
No, definitely not, Veronica, because here's the thing. You have a very limited amount of people that actually hold on to these cryptos. And as a result, that volatility is going to stay. It's not going away anytime soon. What's really concerning, though, is when I look at a company, a distribution company like a Coinbase that's out there that has lost over 80% of its value since its IPO. And you have the CEO coming out saying things like, well, we have to declare bankruptcy. We might have to liquidate your holdings of crypto. That's insane to me.
Can they really do that? Can they really do that?
I don't know how you can. I don't know how you can. That would be like Charlie Schwab going under, and all of a sudden they're saying, hey, we're going to liquidate your IRA. I mean, you can't do it going forward. You're only inviting the regulations are going to be coming in from Capitol Hill. You're going to see somebody grilled on the Hill for this, and I would stay away from that. It's a big red flag right now. If I'm a crypto investor, I'm getting out, and if I'm not, I'm staying far away.
Toby, what's going on in the crypto space?
Well, there's this thing called a algorithmatized stable coin. Say that 5 times. And it's sort of interesting. The stable coin, I go back to the Bernie Madoff scam. Yeah, not so stable. $55 billion from Madoff was lost. This one went down $55 billion in a day. Now, the reason is, I'm not going to get too complicated here, but the reason is it was a bunch of malarkey to begin with. Go look up malarkey in the dictionary.
Malarkey.
The second part is that you have to realize that Bitcoin particularly is a religion. It's a culture. It's a cult. You have people who call themselves maximalists because they believe that the dollar is going to go away and the Bitcoin is going to be worth something. They also strongly believe that Bitcoin is a hedge against inflation. Now we have the highest inflation. We really have about 14% inflation, and it's down 50%. So you know what? Don't join the church. Go to Church of Scientology. At least you can read minds. Go ahead.
You want to know what's bad about it is that you can't take Bitcoin. I know that some places will accept it for commerce, but I can't buy your newsletter with Bitcoin. I can't buy the Stock Traders Almanac with Bitcoin.
No, you can't.
Right. So, what's it good for? What? So I'm in a cult? Big deal.
Listen,
come on.
So Jeff, some people feel vindicated in seeing this big drop, and other people are getting a financial hit on it. So what do you think's happening?
It's a speculative bubble that's been popped to some extent. I mean, it might come back. I've never been a huge fan of cryptocurrency. I like the blockchain technology. I think there's something there, but it's pretty much, as you said, Madoff style, Ponzi scheme. It's just something that I've stayed away from. It reminds me of the Vancouver mining stocks back in the day, or, it's a lot of things come to mind. But I'm looking at, the regulations that you were mentioning. I think that might help there be some stability to cryptocurrencies, where there's some sort of, referee in there, other than a bunch of,
the wild west
there in the Twitter sphere or whatever. It's too wild and crazy, and it's not for me.
Well, we did hear
Veronica,
that Janet Yellen's, saying it's something to be looked at, to be regulated. But Toby, so a lot of millennials have kind of shunned financial advice. They want to do it themselves. What would you say, to investors that are watching? Maybe they're the novice investor. To our viewers, what is your advice?
Well, first off, crypto is not investing. Crypto is speculation, number one. Number two, there definitely are some use cases where the blockchain, reduces cost instead of, doing your Visa, MasterCard and getting a 3.5% charge. If it all worked, you could, do your debit card and it would do it for $0.01, right? But that's in the future. And what the Web 3.0 is sort of the mantra in Silicon Valley now, that they're investing billions, I mean trillions, in new technologies that use blockchain technology that allow you to cut out costs. I get all that. But that has nothing to do with a crypto coin.
It's got to be compliant with the SEC and the other regulatory bodies. That's what people are working on now.
Yeah.
Right.
All right.
But
we'll keep an eye on
people
that.
At home they need to understand it's a hypnosis. Every bubble is a hypnotic event, and social media has made all these coins. You go on social media, you can get on 100 different newsletters that say, we're going to pump and dump this cryptocurrency tomorrow morning at 8 a.m. Buy it now and you'll be up 3,000% tomorrow.
Sure.
That was not the Wild Wild West. That is, pure
Well, we saw
crime.
what happened with Reddit.
Maybe we need a buy, sell, hold NFT.
All right.
Yeah, right.
Thank you, gentlemen. The Kentucky Derby set a century-old record when 80-1 long shot Rich Strike crossed the finish line. But there was another record set that has capitalists hoping to hit the jackpot. What is it? Stay tuned to find out. Buy, hold, sell, brought to you by Crosscheck Management. Hi, everyone. I'm Veronica Dudo, and welcome to Buy,
Hold, Sell. If you have the Russians that are going into Ukraine, the Americans and the Germans and everyone else in Europe is going to say, hell no.
If Russia doing things, logically was their MO, I'd agree with you. Yeah, Todd, why don't you get him on a phone call right now? Hello.
Financial news TV, just the way you like it. Fast-paced, unadulterated, in-your-face, rock and roll style. Join us next time on Buy, Hold, Sell Live.
Oh, yeah, I'm going to remember all that. I can't even remember. Oh, God. I want you to, oh, my God. Fast-paced, no, oh, sorry.
Take one.
Fast-paced, no holds barred, in-your-face, rock and roll style.
Woohoo! Let's kick some ass.
I want you to smash that like button.
Track, cue, dissolve.
Good morning and welcome
from Bigwig Studios. From the Bigwig Media Studio.
Bigwig Media's broadcast center at the Willard is the ideal headquarters to host your virtual meetings and video conferences.
Kudos to our team who's running around behind the cameras.
What I liked about working with Bigwig Media was you guys are the experts.
Our industry pros have you covered. Let's get started.
Thank you for joining us. In last week's Kentucky Derby, a record $179 million was wagered on the Kentucky Derby. That's a 17% increase from last year. Now, it's not just horse racing that's seeing a rise in gambling dollars, it's every sport. Toby, is gambling the new investment of choice for those tired of losing in the markets?
Shame on you for using the word, is gambling the new investing? Okay, gambling is gambling, all right? Number one.
But isn't investing sometimes?
Well, no.
It's entertainment, man.
Yeah, it's, gambling is entertainment. I grew up near Santa Anita Racetrack. I love the horses. I used to go down to the paddock. I used to go to the paddock and see, what horses were sweating, and then I would not bet on those. You could do that, but it's entertainment, right?
I worked in Saratoga for a summer with the track up there. It's a lot of fun.
Yeah, it's awesome. But so first off, let's dissuade this idea of that it's investing. Now, you can invest in sports betting, which is, you're about 3 years late in doing, by the way. We now have the largest sport betting in the world. But when we get to the point, like the UK is, where I can be watching a football game and I'm thinking, hey, I bet you they're going to score a goal in the next 5 minutes, and I can make a bet on my cable TV thing to put a bet down. Now I'm going to be in sports betting, because that is the way it is in most of Europe. Their sport betting houses do 10 times what we do, because we're so prudish. We won't allow people to bet away their rent money while they're betting on these things. So
look what
we have to up the ante here in the U.S. All right. Go ahead, Jeff.
Yeah.
But look what's happening in Vegas. I have a good friend who's a host out there, and the city's booming. I mean, they're bringing in baseball, football, Formula One. I mean, I track what's going on there, and it's fun. I mean, there's stuff there that's just it's a amusement park for grown-ups, as it's always called, but there's more and more there, and it's the gambling just is an attraction for the whole entertainment. I gamble a little bit there, but not much. Mostly I'm going to see Billy Joel, concerts, out to nice dinners.
Yeah.
I mean, it's a resort. It's a place to go.
You know what?
Yeah, if you want to gamble.
I don't. You know what, though, Toby? I don't think you are too late, and I'll tell you why. Right now, the online betting market is valued at $59 billion. By next year, it's supposed to jump to $97 billion. If I'm one of these guys, look, you just saw it with the Kentucky Derby, $179 million, like Veronica said. And you know what? A lot of that money wasn't because people were going up to the pari-mutuel window. They were doing it online. And because of that, now you have to think going forward, you're going to have every one of these other sports that are out there. If you're looking to be an investor, take advantage of this, especially the fact that you have so many states that are legalizing this stuff. And guess which state is on deck? California, your home state. You have to wonder how much money that state alone is going to be able to bring in. And I think that's why those estimates are so big for that market right now going into next year.
But Todd, remember that the FanDuels and all the other guys are spending out of $1.5 billion. They're spending $1,200 to get a $100 bet out of a new customer. So the math is all messed up. I would rather own MGM Hotels. I would rather own Churchill Downs, which is a publicly traded company.
I like the MGM pick, Toby.
So that's an interesting to branch out the conversation exactly to other entities that are still involved in sports betting, though. Go ahead. Keep going, Toby.
Yeah. Well, no, I mean, MGM, forget about Wynn because they have problems in Macau. But MGM owns all those hotels on the Strip. You just don't know it. And they have they are sold out. Yeah, I know, I do too. I have the MGM card. Say hello to Sheila in bar number 3. Yeah. Right. So that part I can understand. I can even understand there's a real estate investment trust that owns a lot of those properties and pays a pretty nice dividend, about a 6% dividend. I could understand that, but until these guys stop bleeding cash, because remember when FanDuel and DraftKings goes into California, they're going to spend another $1 billion to get people.
And the casinos,
I bet on golf.
I do too, but the casinos are jumping on the FanDuel bandwagon. They're probably going to push them out with all of their own online betting.
I agree.
Teasers and MGM. So, I'm more into those big companies that have been doing that kind of action for years. The entertainment companies, the destination places that are bringing people in, not just for the gambling, but for all the fun that everyone's having there.
Todd, your final thoughts?
Final thoughts are this, is that if I'm going to be a gambler, I'm not a personal gambler, but if I was, I would be betting on the success of this show, the Ravens winning the Super Bowl, and the Maryland Terrapins winning the men's lacrosse championship. I tell you that right there, I think you're a sure thing. Those are guarantees.
I would not bet against the Schoenberger boys winning the lacrosse. That I'm on. I got 100 on the oldest one.
I will say this, when you go shopping, you always know you're going to get something. So that's my advice. So
Great
discussion, guys. Thanks so much. Coming up next, we'll dig into two areas still thriving in this down market. Stay tuned. Buy, hold, sell, brought to you by Crosscheck Management. Hi, everyone. I'm Veronica Dudo, and welcome to Buy,
Hold, Sell. If you have the Russians that are going into Ukraine, the Americans and the Germans and everyone else in Europe is going to say, hell no.
If Russia doing things, logically was their MO, I'd agree with you. Yeah, Todd, why don't you get him on a phone call right now? Hello.
Financial News TV, just the way you like it. Fast-paced, unadulterated, in-your-face, rock and roll style. Join us next time on Buy, Hold, Sell Live.
Oh, yeah, I'm going to remember all that. I can't even remember. Oh, God. Yeah, I want you to, oh, my God. Fast-paced, no, oh, sorry.
Take one.
Fast-paced, no holds barred, in-your-face, rock and roll style.
Woohoo! Let's kick some ass.
I want you to smash that like button.
Track, cue, dissolve.
Good morning and welcome
From Bigwig Studios. From the Bigwig Media Studios.
Bigwig Media's broadcast center at the Willard is the ideal headquarters to host your virtual meetings and video conferences.
Kudos to our team who's running around behind the cameras.
What I liked about working with Bigwig Media was you guys are the experts.
Our industry pros have you covered. Let's get started.
Welcome back to Buy, Hold, Sell. Disney released its earnings this week, and two of its main businesses gave us a very optimistic outlook about consumers, theme parks, and streaming services. Jeff, should investors begin focusing on areas where people keep spending despite economic warning signs?
I mean, investors always want to be focusing on companies where people are spending money, but right now, I'm kind of neutral. We had our sell signal for the best 6 months in April 7th for the Dow and the S&P. Cash, patience. We got a few bond positions. We've been stopped at different things along the way. I mean, it's not a time to get super aggressive right now, as we were talking about earlier in the show. It's the seasonally weak period. It's a fundamentally weak time. The technicals are breaking down. 4-year cycle, presidential election stuff. I mean, if you're going to go somewhere, which we'll probably touch on later, is staples, utilities, healthcare. These are the sectors that do well in the worst months and that, are the most value oriented, continue to pay dividends. But honestly, cash, wait for that fat pitch. You don't have to swing. You just sit there and wait for a better pitch. It's not, it's okay to do nothing in the market.
Todd,
hallelujah, brother.
Yeah, I know. Well, he's absolutely right. But the big thing that we saw out of the Disney report was that you had so many people that are ignoring all of these warning signs that are out there. So what they're doing is they're still spending money at Disney. They're going to the theme parks. We saw big numbers out of that. And also Disney Plus, the streaming side. You heard such a horrible story coming out of Netflix, but Netflix also has a problem with content. They haven't been able to create great content, especially since House of Cards has been thrown out the window. So going forward, you look at some of these streaming services, some are big winners right now. People are still willing to spend some of that real squeezed discretionary income, and they're spending it on vacations as well as on entertainment. I think that's a positive sign going forward. You just have to pick and choose which areas you want to look at as far as your investments go.
Toby, how do you see this?
Well, two things. One is that, as I said before, I know 435 times, people got all the stuff they can have. In the 2020 to 22, we used to have an economy where it was like 70% service and 30% product. Well, we flipped around. We were like 60%. So we bought all the stuff. We've already seen that. And all those stocks have been hammered, by the way. What I like about Disney is because the one spending number that we see is people who have discretionary income. And by the way, that's the top third of the 150 million households in the United States. Their number one thing is to get the hell out of my house. Now, for some people, they also like get me out of the house and leave those kids somewhere with grandma and grandpa. Okay, but the issue here is I want to be more in like live entertainment. So there's a live entertainment which is now sold out. Have you seen the tickets? I had a friend who had tickets to see Elton John here. And he couldn't make it. He paid $600 for the 2 tickets. He just sold them for $3,200.
What?
All right.
Wow.
So,
that's an investment.
I mean, right. So I'm going to say I'm going to start investing in tickets. I've seen every major player in the world because I'm 150 years old. But I still want to see the Eagles again. So I'm going to go in live entertainment is where I'd put my money.
We've been going to see live entertainment too. Little rock and roll and blues. Saw Tedeschi Trucks locally here, but. What do you think about the whole Florida situation with DeSantis and Disney? You think that has any impact on the company and that type of thing, or is that just a little bit of noise?
That's really interesting that you bring that up because a lot of people are saying that they need to step away from some of the social issues and then focus on their customers and shareholders. Todd, how do you see that?
Absolutely, but it's not going to prevent anybody from going to Disney. I mean, the biggest issue there, when Walt Disney started Walt Disney World, he went to Tallahassee and said, I want this one plot of land and I want to keep it as my own. He was able to avoid any sales tax issues, but he also had to supply his police department, fire department, all of that had to be supplied by him. Now it's got to be supplied by I guess Orlando or whatever the county is there. But going forward, it's not going to prevent anybody from that. I mean, the Don't Say Gay bill, all of that, you would think that people would have said, no, I don't want anything to do with it. They're not even worried about it right now. So all they want to see is Mickey Mouse. They want to get on those rides. They want fantastic weather. It's really showing in their earnings right now. That's one of those stocks that an investor would probably be happy to hold in their portfolio.
Toby?
All I know is that if you've ever taken your daughter to Disneyland and seen the face, you will do it as long as you live, and then she will take her daughter, and it's a rite of passage. It's a rite of passage. Parents I've seen take second mortgages out so they can take their 3 kids down to Disney because it's about $5,000, but they'll do it.
Way more than that.
Well,
I'd rather go to Vegas.
That was for a day. Yeah, I'd rather go to Vegas. It's made for a day. But as a company, Disney has a lot of pieces, a lot of fires going here. I see no reason to rush in and buy Disney at this point, simply because I think there's better opportunities.
Okay.
Agreed.
So even we see some of the streaming services getting a little oversaturated. They still have their subscribers. So good for them. Thanks so much, guys. So coming up, it's time to make some money. Buy, Hold, Sell Live, brought to you by Transformity Research.
Hey friends, investor friends, this is Tobin Smith. I just show this if you may remember me from my 25 years on business TV, but it's not about me, brothers and sisters. It is about this. We are about 5 times the average, stock average, over the last 2 years, but more importantly, this year, we're up about 67% in our portfolios, while the S&P is down, 12% and going deeper. And the NASDAQ's down 25% and going deeper. Let me ask you this. Are you tired of losing money? Because right now we forecast not only a big recession in 2023, but we think we can do this again. We think it could be up again another 50 to 60% by being in the right place, the right stocks, and at the right time. That's what we're doing right now. So join us, transformityresearch.com. Get on our free newsletter, transformityresearch.com. Join us for free and stop losing money.
If you like Buy, Hold, Sell Live, be sure to smash the like button.
Lights, cameras, connectivity to every kind of screen, with 6 broadcast studios and experts ready to help plan the event. Big Wig Media's broadcast center at the Willard is the ideal headquarters to host your virtual meetings and video conferences. Let's get started.
Predictions? Let's make some money. Toby, what's your buy, hold, and sell this week?
All right, I'm with Buffett. I'm buying more Oxy because they have the lowest cost in the Marcellus and in the Permian in Texas. You're going to make money here. You're going to get a dividend. If good enough for Buffett, it's good enough for me. Second, on hold, I'm holding about 20% of my money in cash. Cash is a strategy in a bear market, all right? So don't be, out going to Disneyland with that cash. And then, on the sell, we've been selling ARKK, the Gathy Wood stuff. I've been talking about that for a few weeks. Yeah. Well, let it come back up because I'm long it right now for the next 2 days, and then you can sell it, okay? It's going to have that, that death rip your face off run, and then sell it again.
Jeff, what's your picks?
I mean, on the hold, the cash, definitely with Tobin. I mentioned it earlier. Also holding my XBI right now, as well as the Qs and the IWM until we get our actually best 8-month sell signal comes in June. Buy side, I'm looking at the staples, utilities, and the healthcare, XLV, XLP, and XLU are the buys I'm looking at right now. Worst 6 months strategies until we get that fatter pitch in the fall. Remember, we got the sweet spot of the 4-year cycle coming Q4 midterm year to Q2 pre-election year. NASDAQ has rallied 70% from the midterm low to the pre-election year.
Wow.
So let's be ready for that fat pitch.
That's good.
Todd?
That's really good. All right. Well, look, I love the buy. I'm telling you what you should be buying, and that's Roku. I love just as what we talked about in the last block. But I look at the streaming numbers that are coming out. Roku is not Netflix. Roku has 61 million subscribers right now. They just added over another million in the last quarter. That's a huge number. Everybody was overlooking this company, and that's the company everybody should probably be focused on. I got to say, I'm going with the consensus here. Holding is cash. Cash is king. You can't go wrong with that, especially when you start looking at some of these online bank accounts right now. The returns are really good. Goldman Sachs has a good one called Marcus, paying 60 basis points. Capital One's got a decent one at 50 basis points. If you look for something easy, you just want to quickly, if you want liquidation, that's what you should do. Look for that liquidity feature, and that's a big one. And I got to say, for selling, I'm sticking to Starbucks. I picked this one about a month ago. I'm saying if you own the stock, get rid of it. The unions are killing them. The $8 for a cup of coffee is ridiculous. There's absolutely zero reason whatsoever to ever go to a Starbucks right now when you can simply go to a donut.
Todd, I bought the Starbucks calls, and it made like 3,000%. So thank you very much. It's your call.
That's it. You probably bought it right when the earnings came out. They had a few decent days, and that was it. If you didn't sell it to the strength, then shame on you. I definitely would not be buying it. If I'm holding it right now, I'm getting out.
Yeah, that's true. But that option was fun. That will pay for my liquor bill tonight.
And those ribs.
Yeah, the ribs. Yeah.
All right, that does it for another edition of Buy, Hold, Sell. I'm your host, Veronica Dudo. Coming up next week, Chris Markowski, partner of Markowski Investments, and Sultan Menji, former CIO of the FDIC, will be joining us. On behalf of our traders, Toby, Todd, and Jeff, and myself, have a wonderful weekend. Enjoy the next round of the NCAA lacrosse tournament. We'll see you next time.